Right now, in 2026, something massive is happening across Africa. Two superpowers are competing intensely for control, influence, and resources. And most diaspora investors have no idea how this affects their investment opportunities. I'm talking about a strategic competition between China and the United States that's reshaping Africa's entire economic future. China has already invested over $1 trillion in African infrastructure, trade, and development. The United States is now racing to catch up with a competing strategy called Build Back Better for Africa. The winner of this competition will determine which African countries boom, which ones struggle, and where smart investors should put their money. In this video, I'm breaking down exactly what's happening, why it matters, and how you as a diaspora investor can profit from understanding this geopolitical shift. Let's start with China. China's strategy in Africa is bold, comprehensive, and has been unfolding for the past 15 years. It's called the Belt and Road Initiative. And here's what you need to understand. It's not just about friendship. It's about strategic dominance. The numbers that matter. China has invested over $1 trillion in African infrastructure, trade, and development. That's trillion with a T, $1,000 billion. To put that in perspective, the entire annual GDP of most African countries is less than $1 trillion. So China has committed more money to Africa than the entire annual output of most African nations. How China's strategy works. China's approach has three main components. First, infrastructure development. China builds things: ports, roads, railways, airports, power, plants. They send Chinese construction companies. They use Chinese workers. They finance it through Chinese banks. For example, a port in Djibouti, a new railway connecting East African countries, a power plant in Zambia. These aren't just random projects. They're strategically placed to benefit Chinese trade and resource extraction. When you build critical infrastructure in a country, you gain enormous influence. The country becomes dependent on you for maintenance, upgrades, and operations. Second, resource extraction and trade. China needs resources. Africa has resources. So China has secured long-term contracts for minerals, oil, metals, and agricultural products. An African country mines copper. China buys it. An African country grows agricultural products. China imports it. China controls the supply chains. By controlling resource flows, China gains economic leverage over African governments. Third, debt-based dependency. Here's the critical part. China doesn't just give money away. China loans money at interest rates that can be high. An African country borrows $1 billion from a Chinese bank to build a highway. The highway generates less revenue than expected. The country can't pay back the loan. What happens? China renegotiates the terms. Sometimes they take ownership of strategic assets. Sometimes they gain political influence. This is called debt trap diplomacy, and it's a core part of China's strategy. Through these three mechanisms, China has become the dominant foreign power in Africa. Chinese companies operate across the continent. Chinese workers live in African cities. Chinese culture and language are spreading. Most importantly, Chinese interests are prioritized in African government decisions. When China wants something, African governments listen because they're economically dependent on China. Why did China invest so much? Several reasons. 1. Access to resources. China needs raw materials for its manufacturing. Africa has them. 2. New markets. Africa has 1.4 billion people. Many are becoming consumers. That's a massive market for Chinese goods. 3. Strategic positioning. By dominating Africa, China secures its position as a global superpower. It reduces the influence of Western powers like the USA. 4. Long-term thinking. China invested for 50-year returns. Most Western powers think in 5-year election cycles. China thinks generationally. For years, the United States watched China's dominance grow. And for years, the USA didn't have a coordinated response. That changed around 2022 to 2023. The United States launched a competing strategy called Build Back Better for Africa. Here's what it is and how it works. The USA's approach. Unlike China's Belt and Road, the USA's strategy has some key differences. First, it's more partnership-focused. The USA doesn't build everything itself. Instead, it partners with African governments and private companies. The idea is to help Africa build its own capacity, not create dependency. Second, it emphasizes democracy and good governance. The USA explicitly states that its development projects are tied to democratic values, rule of law, and anti-corruption efforts. Third, it focuses on technology and innovation. While China focuses on traditional infrastructure, the USA focuses on digital infrastructure, tech hubs, renewable energy, and innovation. Fourth, it involves private American companies and investors. Instead of government-controlled entities, the USA encourages American businesses to invest and operate in Africa. The USA has committed substantial resources to this strategy: billions of dollars in development aid, investment guarantees, and financing. But here's the key difference. It's much less than China's $1 trillion. The USA is investing, but at a smaller scale and through different mechanisms. How the USA's strategy works. The United States is competing for influence through technology partnerships, helping African countries develop tech sectors, supporting African startups, building tech hubs in major cities, trade and investment, creating trade agreements that benefit African countries, encouraging American companies to invest, creating investment funds targeting Africa, diplomatic partnerships, building bilateral relationships, increasing diplomatic presence, supporting African voices on the global stage, education and development, supporting education initiatives, training programs, capacity building for African institutions, clean energy, investing in renewable energy projects, helping Africa skip fossil fuels and go directly to clean energy. Why the USA is doing this? Several reasons. 1. Counterbalance to China. The USA recognizes that China's dominance is a strategic threat. The USA needs to compete for influence to maintain its global position. 2. Market access. Africa is a growing market. American companies want access to African consumers and resources. 3. Democratic values. The USA sees itself as competing between two models: Chinese authoritarian development versus American democratic development. They want Africa to choose the American model. 4. Strategic resources. Some African countries have rare earth minerals and resources critical for American technology. The USA wants secure access. The competition. So now we have two competing models. China's model: large-scale infrastructure investment, resource control, long-term relationship building, strategic positioning, sometimes creating dependency. USA's model: technology and innovation focus, partnership-based, democratic values emphasis, private sector involvement, cleaner environmental standards. Different approaches, different philosophies, different timelines. What this means for African economies and countries. Now here's where it gets important for you as a diaspora investor. This competition between China and the USA is reshaping which African countries will boom and which will struggle. Some African countries are in a strategic position. They're competing for both Chinese and American investment. They're playing both sides, getting deals from each. These countries are seeing massive investment flows. Infrastructure is being built. Jobs are being created. Economic growth is accelerating. Kenya is a good example. Kenya benefits from Chinese investment in transportation and infrastructure, but Kenya also benefits from American investment in tech. Nairobi is becoming a major tech hub, partly because American companies see an opportunity there. Kenya is positioned as a Western-friendly country in East Africa. Result? Massive investment, rapid growth, expanding opportunities. Rwanda is another example. Rwanda explicitly positioned itself as a partner to Western interests. It's attracting American and Western European investment in tech, agriculture, and services. Chinese investment is present, but Rwanda is more Western aligned. Result? Fast growth, booming economy, expanding investment opportunities. Nigeria is different. Nigeria is so large and economically important that both China and America are investing heavily. Nigeria attracts Chinese investment in infrastructure and trade. It also attracts American investment in tech and oil. Nigeria is hedging its bets. Result? Nigeria is booming despite political challenges, with investment flowing from multiple sources. Then there are countries that are heavily dependent on China. They took large loans from China. They depend on Chinese resource markets. They're heavily indebted to China. When these countries face economic hardship, they struggle because they can't easily pivot. They're locked into Chinese arrangements. They might be missing out on American investment opportunities because they're politically aligned with China. They might face political pressure from the United States because they're too close to China. Result? Slower growth, fewer investment opportunities, economic stress. Some Southern African countries fall into this category. Zambia, for example, had to restructure its debt with China because it couldn't pay. That's an extreme case, but it shows the risks. The smartest African countries are playing both sides. They take Chinese investment where it makes sense. They take American investment where it makes sense. They position themselves as partners to both. These countries are getting the most investment, the most partnerships, the most opportunities. Ghana is an example. Ghana has both Chinese and American investment. Ghana is seen as a democratic, stable African country. Companies and investors from both the East and West are comfortable operating there. Result? Ghana is one of the fastest growing economies in Africa. Opportunities are abundant. The key insight for investors. Here's what matters for you. The countries winning this geopolitical competition are getting richer faster. The companies and people in those countries are building wealth faster. If you're investing in African countries, you need to understand which are winning the China-USA competition, because that determines their growth trajectory. Investment implications for diaspora. Now, let's talk about what this means for your investment strategy. Implication. Number 1, growth differences by country. Different African countries will grow at different rates based on their geopolitical positioning. Countries winning the competition? Expect 5 to 8% annual GDP growth, maybe more. Countries losing? Expect 2 to 3% growth or even contraction. As an investor, you want to invest in the countries with higher growth, because faster economic growth means property appreciation, business profits, and stock market gains. So, your investment decisions should be informed by understanding each country's geopolitical position. Implication number 2, sector opportunities. China's investment focuses on infrastructure, trade, resource extraction, manufacturing. USA's investment focuses on technology, innovation, clean energy, financial services, education. This means, in China-aligned countries, opportunities are in infrastructure projects, resource-based businesses, manufacturing, logistics. In USA-aligned countries, opportunities are in tech startups, clean energy companies, financial services, education technology. If you're investing in African startups, you want to invest in tech-heavy countries like Kenya or Nigeria, where American investment is flowing. If you're investing in real estate, You want countries with active infrastructure development, which could be Chinese-influenced or strategically balanced. Implication number 3, political stability and investment climate. Countries aligned with democratic powers, USA, Europe, tend to have more transparent governance, stronger rule of law, better business environments, more predictable investment returns. Countries heavily dependent on China might have less transparency, more political volatility, sometimes aggressive debt collection, higher political risk. As an investor, political stability matters. You want your investments protected by rule of law and transparent systems. This favors countries with Western alignment or balanced positioning. Implication number 4, currency and economic stability. Countries in favor with Western investors tend to have stronger currencies, better access to international credit, larger foreign exchange reserves, more stable economies. This matters for diaspora investors because it affects whether your investment can be easily repatriated to dollars. Implication number 5, emerging opportunities. The competition between China and USA is creating new opportunities. American companies are expanding into Africa looking for growth. That means new businesses opening, new markets developing, new wealth being created. Chinese companies are competing harder. That means more infrastructure, more job creation, more economic dynamism. Countries in the middle of this competition have the most opportunity. Based on this geopolitical analysis, here's how I'd think about African investment. First, countries positioned between China and USA like Kenya, Ghana, Nigeria, Rwanda are highest priority. They have the most investment flowing in, the fastest growth, and the most opportunities. Second, countries more aligned with Western interests like Rwanda, Botswana, South Africa have lower political risk but might have slower growth. Third, countries heavily dependent on China have higher risk but potentially higher growth in specific sectors if you understand what's happening. Fourth, diversify across countries so you're not betting on one geopolitical outcome. The smartest diaspora investors understand the geopolitical context. They invest accordingly, and they win. Let me be clear about why these matters beyond just investing. Africa's future is being written right now. The outcome of the China-USA competition will determine what Africa looks like in 20 years. Will Africa be a prosperous continent with strong institutions and democratic governance? Or will it be dominated by one power with concentrated control? Will African countries have access to clean energy and cutting-edge technology? Or will they depend on outdated infrastructure? Will African people have opportunities and upward mobility? Or will they be stuck in economic patterns set by foreign powers? These aren't abstract questions. They're directly tied to your investment returns. If Africa becomes more prosperous, more democratic, and more developed, your real estate appreciates, your stocks go up, your businesses grow. If Africa stagnates or becomes more dependent, your investments struggle. Here's what I want you to understand. As a diaspora investor, you have an advantage. You understand both cultures. You can see opportunities that outsiders miss. You understand how American capital thinks. You understand how Chinese development works. You understand African culture and context. That's a massive advantage. When you invest in African countries positioned to win this geopolitical competition, you're not just making money, you're participating in building Africa's future. You're helping create the prosperous, developed continent that our ancestors dreamed of. That's powerful. In my next video, I'm breaking down which specific African countries are winning this competition, which ones offer the best investment opportunities, which sectors are booming because of American versus Chinese investment, and I'm showing you exactly how to position your portfolio to profit from this shift. Make sure you're subscribed so you don't miss it. The battle for Africa between China and the USA is real. It's happening now. It will determine Africa's future. But here's what most people don't realize. It's also creating an enormous wealth-building opportunity for diaspora investors who understand what's happening. You now understand it. Use that knowledge. Invest strategically. Build your wealth. That's what Affluent Africa is about. I'll see you in the next video.